We're always looking at mortgage rates, but you're right, this is certainly a focus for many Australians too. Let's look at another bank downgrading its outlook for growth. The CBA now expects GDP growth of 3.5% for this year, and that's a big downgrade from the 4.7 it had originally forecast. So what are they looking at? Why have they changed their mind?
Well, the reason they've changed their mind is the outlook for inflation, the outlook for interest rates, the outlook for housing prices. It gets even worse next year when they're basically saying now that they believe that economic growth in Australia will be just 2.1%. So it really is a sharp downgrade from where they had been. The more worrying aspect of this, and you can see that they were at 4.7%, they're now at 3.5%, and as I say, next year 2.1%. So what this shows is economic growth in Australia is slowing as a result of the higher prices and inflation and energy prices. And on top of that, also the rising interest rates are cooling the economy. The other important aspect of this report out from the Commonwealth Bank this morning that really is a bit of a head turner is it expects this year, from the peak of house prices to the end of the year, that house prices on average around Australia will be down by 15%. So now consider a person who's got a 20% deposit on a mortgage that they've recently gone into. If they've got a 15% fall in their house price, it means that they've got fairly skinny margins in regards to the equity in their homes. And that, I think, is going to be a real issue. While people have got jobs, it's not a problem. But when people start to lose jobs, if that does happen, then it's going to become more of a struggle for an increasing number of families.
Ross, it was great to hear from the Treasurer at the Sky News Economic Summit yesterday, the inaugural event. I thought he was quite upbeat about where the economy was headed, notwithstanding some of the headwinds that we've just spoken about. But inflation, as we've just discussed and been discussing for weeks now, is going to be the story. The RBA has indicated that'll be above 6%. And I thought Jim Chalmers was indicating that he's worried, and Treasury thinks it might go even higher than that and stay high.
Well, this is the reason why you've got interest rates being moved so rapidly by the Reserve Bank, why the government itself is going to have to find significant cost savings in its budget, which he now wants to be on October 25 as his preferred date. And so really it's a situation whereby if the government can find those cost savings, it takes pressure off the budget, and especially if it brings forward some of its measures, including the childcare subsidies that it wants to create more workers in Australia to take pressure off wages. But really, in many ways, it's a perfect storm with the energy prices rising. And what you're seeing here from the Commonwealth Bank with the slowing down of its forecasts of economic growth is an acknowledgement of what happens when you have very rapidly rising interest rates and very rapidly rising inflation. And it's that the Reserve Bank, that the Treasury and also the Treasurer himself are going to have to deal with in the months ahead.
Yep, absolutely right. Ross, thanks so much. We'll speak soon.